Yes. Hello everyone, this is Martin Volatus from FxVolatus. Once again, I'm here to take you through daily cycles, weekly cycles, market structure. Probably I'm going to take you through trading opportunities we had this week from FxVolatus. Probably the trades we took the first week of the year and the last week of the previous year. As the market was consolidating, we had very good setups. So that's why I'm here this morning to take you through that. My name is Martin. I'm a senior trader at FxVolatus as well as a mentor. I've been trading for 5 years now. Trust me, what I'm going to share with you today is very powerful. Please listen to me. Okay, when you look at the charts, we had a cycle this week which was completed and a new cycle began. So we had a cycle which began this week and a new cycle began. So roughly, let me show you something. This week we had this move to the downside, then the cycle was completed. Yesterday, then we had a very clean sell to the downside. So this was we had two trades this week, two powerful trades this week. We had two powerful trades this week. This sell here, we had a sell at this point. We had a sell there and another sell here. So we are waiting for a buy setup for this cycle to also be completed. Probably the market today is preparing for the new cycle of the week. And for us at Volatus, we are waiting for something like this. Now he has done that, so he has broken below. So we are waiting for him to break above there. So he has grabbed liquidity below this, because yesterday we had people who bought at this point. The people, early buyers, bought at this point. They have been taken out to the morning. So we are waiting for him to close above. So when he closes above, so we shall wait for him to come back to this scan, which grabbed the liquidity, then back to where the cycle, to the origin of this move to the downside. So this is what we look at. Of course, we look at structure, plus other key things. So basically, let me take you through the outlook for the past two weeks and show you the good trades we took the last week of the year, the first week of the year, and the second week. Later on, I'll come back to the trades of this week. This is very interesting. Surprisingly, the market is interesting. We are liquidity traders. We trade liquidity in the market. As me, I've been able to get into interaction with different mentors, and I commend you all my mentors out there. I've met a number of mentors, but I was able to trade their strategies for a while until I could not see what they are seeing. So that disturbed my mind a lot. So how come these guys are seeing this thing and I'm not seeing it? So that's why I sat down and tried to pick what can work for me out of this. So whatever I'm going to share with you today, guys, is what has worked for me. And I urge you guys to take this as a starting point for you guys also to craft something which can work for you, which can suit you mentally. Okay. Now, we are liquidity traders. We always look for market maker footprints in the market. So our main goal is to understand that we are not able to move the market. These market makers are the one who have the ability to move this market. So for us as retail traders, we do not have the capacity to move the market. And I wish we all know that. So now, since we do not have the capacity, and these guys are always looking for liquidity in the market. What is liquidity? Liquidity, this means these are stop loss orders, buy stop orders, sell limits, buy limits, stop orders. Whatever order in the market, these guys are looking for that order to be triggered. So now what you should do is always to wait for them to trigger these orders out. And when they trigger them, wait them to break structure and return to that zone to mitigate or look for a premium and a discount price for them to move. So now when you look at this is H4. We had liquidity grab at this point. A very good liquidity grab. And this candle was responsible for grabbing that liquidity. And the liquidity was taken off, taken out there. Sorry. The liquidity was taken at this point. Yeah. Okay. Try to be so much actually. Then structure was broken on H4. Remember, we are looking at candle closes. Then the market came back. So now this was the first cycle of the first week of the year. It was completed. Then for the second week of the year, the market pushed to the downside like that. And then the cycle for this week was completed. Then the market pushed it down. So we have another cycle which is coming into play. So I urge you guys to look at this and understand what is transpiring in the market. Okay. Now, when we jump to a lower time frame, so these cycles began way back from this side. So I can even give you an example. Okay, give you an example here. We have the same approach here, the same cycle. The market broke the downside, and the market came back again. The same playbook. Came back down again. I'm going to take you to lower time frame and you will appreciate this, what I'm trying to do. So when we move to a lower time frame, let me take you to a lower time frame, guys. Yes, this is where it all began. It all began from this point. This is 15 minutes time frame. I came here just to illustrate for you to understand what I'm trying to push. So as I told you, it is all about liquidity. And we only know one person who can move liquidity in the market. And these are market makers. So our task is for us to wait for these guys to come out. You see, I can give you an example. You see a shark, maybe a whale. They are always submerged underwater. They always come out to the top to breathe. So this is how these market makers behave. These are sharks. They always hide themselves. They only come out to grab liquidity and move. So they always come out to breathe and go back. So their behavior is like more or less than a shark or a whale. So now, let me try to do this. By the way, for those of you who this indicator is good. Many of us like making analysis on trading view, but me, I prefer making analysis on the platform where I trade. No offense to people who have trading view, but if you do not have access to trading view, if you are like me who prefer trading on the same platform where you do analysis, don't have this indicator, feel free to inbox me, or you can go to properties, then you click this, then you open up your scale so that you can move your chart around like this. So now back to the point. We are always waiting for the market to make a footprint. We want to see his footprints in the market, and is the only person who can move this market. So now you see this aggressive move to the upside in these three candles. There's only one person who can move this market like this. Then after moving this market, he runs away very fast in an opposite direction. So now when he does that, he grabs, he runs in an opposite direction. So he breaks structure, 15-minute structure, H1 structure, H4 structure. Then it comes back in that zone to mitigate. So now that is a very clear indication that we have the big man in the house. So after breaking structure, they are always going to create what we call local liquidity. You see, liquidity was created here. And I told you liquidity, these are stop losses. Imagine people who sold at this point, put their stop losses above. And people who sold at this point put their stop losses above. Then people sold here. So we have stop losses here all over this place. 10 pips above, 20 pips above, 5 pips above. And then we have buy stop orders. People are waiting for a breakout to the upside. So we have buy stop orders. So guess what? When this money comes, it grabs through these orders, then he runs in an opposite direction. He takes away stop losses, then he activates buy stops, then he runs in an opposite direction. So in that sense, what really happens is very simple. Sorry for that. We have bikers around. Once he grabs liquidity, he takes out stop losses. Then he activates buy stop orders. Then he runs in an opposite direction. So he comes back in that very zone to mitigate. So he came back into this candle, what we call the Volatus candle or liquidity candle. I call it a market maker footprint. So the name doesn't matter. I'm just telling you so that you don't get confused if you hear me saying Volatus candle. So then this was our trade to the downside. Very simple. So now that cycle was complete. Very, very complete. So it is very, very interesting. Very, very interesting for you guys. Then when you look at this, this move, let us see whether we have some history. Side, another beautiful setup. Now, I'm going to make a video about market structure, trend interruptions, market reversals. We are going to have a series of these videos. Please, I urge you to subscribe to our YouTube channel at FxVolatus. That's our username on YouTube. Yes, YouTube brought username. So that's our YouTube username. So you visit FxVolatus. You're going to have a series of these videos about market structure. Now we had a trend moving to the upside. I usually tell you guys that if the market is moving like this, making higher highs like this, then the market comes, breaks this level. Many of us think that the market is going to reverse, but what happens instead, the market pushes to the upside. So we call this a trend interruption or a donk kick. Since people have been buying, trading their stop losses, and the market will come and kick you out. So we call that a donk kick. And when you are kicked out, what happens? We call that a trend interruption. This trend was interrupted to kick out people who have been trend following so that it can continue to the upside. So this is a very, very important clue in the market. So every time I see that, who is able to do that is a market maker. Who has the money to do that is a market maker. Then I look at how aggressively it was done. So when you look at this, it was a very aggressive move to the downside and a very aggressive move to the upside. So this means we had a market maker footprint. Hence this candle you are seeing, this red candle. That's why the market came back into this candle. So that was a bigger cycle which was completed. A weekly cycle which was completed at that level. I don't want this video to be very long. I would have taken through that, but I hope you understand why the market came back into that, because it was completing a bigger cycle while absorbing liquidity around this point, but completing a very big cycle. So which means we had another buy at this point, a very beautiful one. Then after buying this, I told you every time a cycle ends, another cycle begins. So on 15 minutes, a new cycle began from here. Then the market came back up. So I don't know whether I'll be able to see the history. Yeah. Yes, this is beautiful. Okay. When you look here, I hope I'm not confusing you guys. These are cycles. But we look at the origin and the end of these market cycles. We have intraday, daily, weekly, monthly cycles. But we are day traders. We are interested in intraday cycles. So characteristics of a cycle beginning or a mitigation ending, we see this is beautiful, guys. You see this? This is all liquidity here, which was grabbed by this candle. So the reason of this aggressive move was coming for all this money inside here. So now this is the candle which finished the business. That one was the candle which finished the business. So we wanted him to come back into that candle, then move to the downside. But he never tapped this candle. He missed it by how many pips? By 2 pips. So on 5 minutes, he never touched that candle. Then on 15 minutes, the candle was huge. So, but usually if the candle is huge, we take half of that candle. That's our principle. We take half of that candle. So on MT5, we had a 10 minutes candle, which gave us a very clean entry. Fortunately, I don't have it here, but we had a very good entry there. But let us not force an entry. But some guys took it. I also took it on 10 minutes because I know the cycle what was doing. So it came back into this candle again down here. Then it pushed back up to complete another cycle. So basically, let me hope I'm not confusing you guys. So that's how the market behaves. So one cycle is completed, another one begins, another one completed, another one begins. So the beginning of a cycle, we see it with liquidity grab, aggressive run away from that zone, then coming back to mitigate. That cycle ends. Then another one begins like that. Then fast forward to the previous 2 weeks, the beginning of the year. Let me make my chart screen. So we drive this from H4. This was from H4. So still the same concept. I've shown you it is the same thing over and over, even from this side. I'm sure now you agree with me. It is the same concept. Even here, let me show you here. Let me show you around this point. Intraday traders, just come on. You have to watch this. This is a must watch for intraday traders. For swing traders, the same thing. You just switch to high time frames. But for me, 80, 50 pips, 100 pips, I don't need to swing anymore. Okay, it's the same case here. Same. We have liquidity grab here. By the way, this move downside was another move from this candle, like this, like that. It's like this. like that. Then you push to the downside like that. So the market came back into this candle. So these are market cycles. I wish you guys can easily learn to understand this. This is what transformed my trading. Then with this, you can add in your trend lines, you can add in your support and resistance, you can add in whatever approach you want, but so long as you know where you stand in the market. But this is very important if you teach yourself market structure. So I'm going to have a 5-video series of market structure of 10 minutes to 15 minutes to take you through, guys, how we read market structure, the Volatus way. Whenever I say the Volatus way, the way I understood it and what has worked for me. So now, there are people who fear to enter here at this point. And since we are day traders, at this point, at this time, we are sleeping here in East Africa. We are sleeping. So nobody will wake up during Asia to trade. But I always urge my students to put in pending orders, sell limit, buy limit. But if you missed that, you had another setup in the day. Yeah, in fact, you had it too. Let me zoom in. I like big things. I think I can take off this. Now, when you look at this candle here, like this, that is the candle. I can even take the whole of this move here. So now that's when the structure was broken. If you don't know much about structure, you join our YouTube channel at FxVolatus. Join our Telegram group. We share these setups every day at FxVolatus. If you go on Telegram, join our Telegram channel. Now, structure was broken. Then the market came back to mitigate. So that was another entry during the day. But we had liquidity grabbed here. So this market will always create local liquidity. The market will always create local liquidity, guys. I always tell you that. Always will create local liquidity. And when that local liquidity is created, it is grabbed. So we see the footprint, the market make a footprint. Let me show you this, guys. The shark came to the surface. It wanted to breathe and it had to come out. So now this is the shark coming to the surface. This is the footprint. Who has this money to move this? You see this aggressive candle. You see the engulfing. We shall talk about the most important candlesticks on the chart. So this is one of my most important candlesticks. Whenever I see this candlestick pattern, then followed by a break of structure to the downside, always wait for the guys to come back and mitigate. So we had another second trade of that day. So our first trade was 96 pips. Then the second was 70 pips. I told you we always take profit at a break of structure at swing points. But those people, we have some people who can add line and swing to the downside. So it's always okay. You can swing to the downside. Okay, we can proceed, guys. We can proceed, guys. Now that was our second trade. A very interesting trade. A very interesting trade. Very interesting. So sorry guys, I have some students behind me. They are telling me they could not believe that they could trade when the year is ending or when the year is beginning, because they are always being told that the market is consolidating, there is no money in the market. There's always money in the market because the world does not stop because the year is ending. So the market will always consolidate, but I'm showing you how good the consolidations were, and we made some good money during this consolidation. So that was our first move to the downside. I've told you we had a very good setups here, but I did think continued. Let me even take you to the next day. Let me not stop there. This video is going to be long, but bear with me, guys. I wanted to make a 15 minutes video, but it is interesting. So the same thing happened there. Another cycle. Boom. See again, another characteristic. Another. When you look at this point, there is local liquidity. Then the market maker tried to move down to induce more people to sell. Then after those people sell, he came and kicked them out, took their liquidity from that point. Then after, he ran to the downside. So these are the market maker footprints. The shark will always come out of water to breathe or to get sunshine. I don't know. Or the whale will always come to the surface to breathe. So these sharks will always come to the surface at any one point. So now when a shark comes to the surface, always wait for them to come back to the surface at the same point. So they came up to the surface here because liquidity was here, was grabbed. So they came back at the same point. Even here, liquidity was here, was grabbed. The shark came to the surface. It went under. It came back to the surface. Then it went under. It came back to the surface. Now, these are cycles. These are cycles. Guys, this is very interesting. Join our YouTube channel. Join our Telegram channel at FxVolatus. Follow us everywhere. Facebook, Twitter, Instagram. We are at FxVolatus. You are going to enjoy this. Believe me, guys. Things are not as hard as we used to think. I think we can all do it. Then another setup here. Now this is this week. No, last week. Yeah, last week, Friday, the first week of the year. So we had this. We had a very good trade. Liquidity was grabbed. The shark came to the surface. Then it went under. Then eventually the shark had to come back to the surface. This is the candle which grabbed the liquidity. So we took this trade. Try to clarify this for you guys. Okay. This is the liquidity. People sold when the year was beginning. People sold to the downside. Then the stop losses up. They put their stop losses up. Then the market came for the shark came for them. Now this is the kind of interest. This is the kind of interest. Now this is our culprit candle there. So now that's the footprint. We call that the market maker footprint. When the shark comes to the surface, it will always come back to the same point. That's how simple I can illustrate it to you guys. Hope you understand. Then it did the same thing here down. Relatively equal levels. Liquidity was grabbed inside here because we had the people are buyers. People were buying for 1, 2, 3, 4, 5, almost for 10 hours. People were buying. So it came, kicked them up, and it came back to the downside. So we had a buy here. Of course, we have other confirmations. You can wait for local setup. You can always wait for a local setup. Let me show you a local setup here. Because people might be wondering, how could we just buy from there? Remember, we are structure, traders, trade structure. Let me make this very simple for you. Let me start from here. For those of you now trade the structure, there. Then the market came up like that. So we want him to break. So the last higher low, lower high, sorry, is here. So the market broke structure. So it came back down to this candle. Then we bought. Again, structure was broken here, then to the upside. So we had very good buys at this point. Let me show you guys. If you go to a lower time frame, Let me take it 15 minutes and I show you how beautiful it was for us on this very day. So, okay, let me use 15. I was going to use 30 minutes, but it's all the same. Okay, we have these points. We have here last lower highs. It was grabbed here. So structure was broken. Structure was broken. Then the market came back down to mitigate in this point. That was our first sketch. So let's try to be clean. Let me try to be clean. But we had good trades on this very day. We know we have to buy here, but some of us are always skeptical. Can I just put in a buy? No, you can wait for a lower time frame structure. I told you guys the market is fractal. What happens to a higher time frame always happen to lower time frame. So you can use that one to bulletproof your trading setups. Now, market was coming from up with this. This a close below. Yep, it closed below. With that. Then block structure. Our last lower high. Block structure there. The market went like that. It came back down here. We bought. We had a very beautiful buy of 40 something pips. Then along the way, still the same thing will happen. Liquidity, people bought here, so liquidity was grabbed. So the market block structure again, and it came back into this candle again. Can take halfway or all of that candle. Then we bought again. So it is the same thing over and over. So that's why I'm like, we had a buy here to the upside. But our sweet sell, we are waiting for a sweet sell from up here. This is our kind of interest. This last green candle which grabbed liquidity. So we're waiting for the market to come back to mitigate. And the market came back in that zone. And it gave us good 80 pips. But you look at this. Something also interesting here. Very, very interesting. Something is interesting here. When you look at this, there's liquidity here, liquidity here. And the market came and grabbed that liquidity. So we have another culprit candle down here. So we are just waiting for the market to come halfway of that candle. So we saw the up 80 pips, then we bought again. Then it came back into this candle which grabbed the liquidity. This candle. Let me clean up. Let me clean up and make this very clean. So this is the candle responsible for mitigation. That one, I think I can take off this. So now we sold him down, then we bought him here again. So we had to sell again here. So now that was the move responsible for us to sell this week. So we had a sale this week on Tuesday. It is very interesting for you guys. So we had a very, very clean sale because we are still under the same price, offered price. Shall look also at what offered prices. So we had a very clean sale. Then the market went down. So we never got a clean buy to the upside because I was waiting for our setup. As a trader, you must know this setup. It's what dictates all reversals. I'll have a series on market reversals. Just join our YouTube channel. Like that. So we are waiting for something like that for us to buy, but you know what? But nevertheless, he came back into our our source or the origin of it. They moved to the downside, so it came back here. Not forgetting that this was still holding, so we had a very beautiful sell to the downside. Then lastly, as I've been telling you that I have like students who are not comfortable with just putting in sales. So I always tell them to move to a lower time frame here and still do the same thing. The market is fractal, to always come back to the zone. So since the market is fractal, we have that breakout structure to the downside, then coming back to the upside. So our interest is very simple. Once the market come back into this zone after breaking structure. So the market came back into this zone from down, it came back. Sorry. The market came back into this zone. Then we had a sell to the downside. As clean as that. So this is our candle responsible for the sales. So this is our candle responsible for the sales, this one. So we had a very clean sell this week to the downside. So I hope you guys have seen the outlook of the market. The reason for the sales to the downside. Now we are what we are looking at. We are waiting to see. Liquidity has been grabbed for our sellers. So we can only buy. We are still selling. We can only buy if this zone is broken. If the market does that, because it has grabbed liquidity here, I see our setup is in the play for our next week cycle. So if the market closes up there, they need to make a pullback into this candle which grabbed, then move to the upside. So we have a lot of liquidity which has been left behind, so it might go up and grab the rest of the liquidity. Okay guys, thank you for watching my YouTube video. Please subscribe, invite people, share this. We are going to have a lot of jam-packed content. This is our Volatus approach. This is how we look at the markets. So if you really believe this video has helped you, please share it with somebody else. We have daily market analysis. Join our Telegram channel at FxVolatus. Okay guys, you wait for me in another video. I'm going to make another video about marking market structures and the trend reversals, trend interruptions. So that's going to be our next video. Not forgetting beginners, I'm preparing a series for you guys, for you to introduce you to this game. A foundation course. There are going to be around 6 videos for beginners. So you are also going to be catered for. Thank you guys. I remain Martin Volatus.